Yo, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part and coming on into this free lesson for Good Vibes Trading. Shout out to Kenny D out there. We are going to go over liquidity and momentum and more on today's live stream. So far nobody is here, but hopefully you'll see this later. What we're going to do is go over how liquidity gets trapped in the charts and how the market makers go for it. Yeah. So let's take a look, shall we? First and foremost, this is what I had BTC in. We had the pitch fan here. This was going up to the impulse, and retrace regions. This is what you would call a pitch fan. So you go to the pitch fan region and you could do 3 clicks. So you do the low to the high to the low, and it will capture the price in these diagonal fib levels, the mean reversion area in red, and I was capturing it back here, and we started to get trapped in these ascending channels that followed it. Even back here I was catching this. It's pretty amazing. So we're at the 0.706 region of the pitch fan, which is, we could potentially come up to 28k before seeing a dry up of some liquidity pools. Let's go into the liquidity, shall we? This is high block capital. For any of you out there that don't know what it is a liquidation level and liquidity heat map. It shows open trades and where their liquidation points are. So we're going to go into the 1 minute time frame for this. This is $70 a month, and we can provide it to you free of value to show you how it works. So as you go into this, you can go down here to the cumulative liquidation levels delta and see that there are $9.77 billion in long liquidations imbalance to the downside. Now this is on this 1 minute time frame, which is 6 days of 1 minute data. And as you see, you can zoom in to different areas and see where those pools are in more detail. This guy up here at 27.74, it's about $270 million that opened their short up over here at 27.110, which is currently around where we're at. So they are still open, and it's break even for that guy. Earlier on, I was speculating they might come up to that when they were over here. I guess they went for this $79 million guy first, but eventually they're stacking up the shorts to potentially take out this pool here, this local pool. And above, you have some more induced up here. As we go to the higher time frames, we go into the heat map to see that. So we're gonna go skip the 12-hour and go into the 7-day time frame, and you'll see on the 7-day time frame they've induced a large pool down at 23,850. By large, I wouldn't consider that necessarily large. As we go to the higher time frames, you'll see it's about 6 billion caked up in different layers here. Probably about $20 billion in total. Still, the imbalance on the 7-day is to this level down here, although they've been caking up a good 10 to 15 billion up here, just a hop, skip, and a jump away at 28k, paving the way for more upside. Let's go to the 1 month time frame. As you see here on the 1 month, we have 8 billion starting to appear. more on the monthly getting pooled. This is as the internal taps into external liquidity. We can go more in detail into external versus internal liquidity. Now we're stepping into external liquidity. So you see the 8.9 billion, 9.8, 7, 5, 11, the imbalance starts to appear to the upside. So are they going to continue higher? By this time frame, it says yes. As you go to the 3-month, you see that they caked up a nice juicy amount down here, but they shifted away from it after having their fill from 21.6 all the way down to 19.4. They basically gobbled up all those billions of dollars and had their fill and shifted out. So these lucky campers got to remain in the game, for now anyway. And you still have this above. So what's keeping us lurking above, do you say? Well, this is when you go to the yearly time frame and you see these trades which have been opened since June of 2022, and they've been stacking nicely all the way since then. And these pools have been juicy to say the least. You had $162 billion taken out at 26.8, $120 billion at 27.2, $138 billion at 27.6, and then they retraced a bit, and then they finished the job. That was what they did recently. So there could be some more potential in store, because we have another 9 billion induced up here at 28k, and 80 billion from a previous 60 at 28.4. So it's starting to get caked up in these upper regions as people start to open up more shorts and they pave the path to the upside. So it's pretty sparse down here by comparison. So for all intents and purposes, we could go higher, folks. And that's how you view the liquidity. And they induce ideas into the charts like these double bottoms here, which bring liquidity in, and then they go and grab the liquidity and then shift out into that direction that all these guys hoped. The dead weight of the longs actually countermines their idea. So ironically, it causes the liquidity grab to come grab them and then shift out. And then as things were getting bearish around New Year's, the shorts were stacking and they came up and grabbed the shorts. So it's kind of this game theory idea of traps and how the market maker induces traps and liquidity into the charts. Let's go take a break for a minute to see if you can hear me properly. I can hear myself, so I know it's actually coming through, but how do you hear it? Let's see.
Sounds pretty clear, brother. Is that the new mic?
Oh, yeah. How's it sound?
It sounds good, bro. It sounds good.
Nice. I could add a little bit more pizzazz, so.
No, definitely hear the recording afterwards. Check it out. But I remember the last recording you sent me, and it sounds way more clear now.
Oh, that's good. That's good. So yeah, this is high block. Have you ever seen it before?
I think I have. I've seen that. I think if I type a certain command right now on what is it, on Alpha? You know how it pulls out the charts, but we normally do it in chat. If I do a certain command to it, it gives me something that looks similar to that. Real similar, but I've never used it. I never really understood it. Getting a better understanding now that you're explaining.
Yeah, it has multiple time frames, so you have to kind of juxtapose them as I was just doing, because it starts to tap into pools on different time frames, and then the heat adjusts accordingly. So on this time frame, you see the yellow equals $200 billion, and so the colors will shift. So clearly you see that there's still some imbalance up here.
I don't know. Nice,
so
nice. I like it.
it kind of gives the narrative of like, how is it we can keep going up without retracing? Well, it's like the shorts are clearly adding, which is causing the path to be paved right before your eyes. So it's kind of like cheating, actually, because if you were back here, let's say, and you were seeing this, would you have thought the long was in store or a short was in store? You would have seen like this imbalance, like holy moly, there's $400 billion here at 17K in October, and then yeah, they just went right down and grabbed it. And so that's what the liquidity grab's about. It induces liquidity in just to grab it and then say, see you later, folks, and then just goes in the direction they hoped. So it's pretty wild. I don't know. I love the yearly time frame the best because it's the most obvious of a liquidity grab, like inducement of a double bottom liquidity grab, then goes exactly to where everyone hoped it would. But yeah, I mean, the 1 minute gives you a different picture because you can see a minutia of trades and where they open them. So if you zoom in here, for example, you can kind of see like this guy opened his short at 98 million here, and then they came up and knocked him out. And when the line gets cut, they've knocked him out. And so you can see how they just go down and grab these guys and then go up and grab this guy and then go down and grab these guys. And so consolidation is just inducing more into the charts, so you get a real kind of clue as to how structure develops over the sentiment they induce to enter. And you start to, I don't know, what's the word I'm looking for? Like I stopped seeing patterns for just as patterns, but more as like traps that bring in liquidity, so to speak. So this guy here, I was saying this morning, because this guy opened up a huge short at $270 million at 27.74, and it's here. You could see where they opened it right there at 27.11, and we're currently at 27.160. So they played with the idea of putting him in the red, and they played with the idea of putting him into profit, and now they're back to his break-even point. So they're kind of like gauging what this guy's gonna do. Is he gonna close it? Is he gonna leave it open? He didn't close it when they went up a little bit, so they gave him a little bit of profit to see what he would do. And then now what? Are they gonna come spike up and grab him? And this is where I start to look at where we are on the right side with the black line, and I start to see, is there anything nearby? Well, there's this guy up here for 59 million at 27.415 that's currently underwater by the looks of it. So they could be coming up to him in the immediate time frame, and they could also be gauging to spike up to this dude. So if you were just looking to scalp it, you would be looking at that potentiality right there. And yeah, because just right around there, there's nothing else in terms of longs in the immediate zone. Now, of course, all these other bubbles below and above opened as well, but the size tells you where potential imbalances may lie. And once again, the cumulative is down here for 9.7 billion towards the long imbalance, but we already established that on the higher time frame, you have all of this still resting above, $150 billion plus. So that's what's holding us up right now. With that in mind, now we can kind of go out of this diagonal pitch fan thing that I like to do, and then just go into regular fibs and stuff like that and see what I was seeing. I already put all the fibs here. We could do a different thing on that. This external liquidity range, so we'll just put that out there. Like, so you do the fib from top to bottom here, from the top of the impulse to the bottom. You don't need all these lines, so you can save a profile in your templates for the pocket level. And basically you get this nice fib pocket here. You got to be particular about where the impulse began. So it started, let's go here on the 12-hour. So technically we went up here and then we started our downward ascent here. So we can kind of move this. I was not exactly accurate with it. And so this is your external liquidity fib level, and you look for the rejection on the 618 as we were making our ascent up. I was putting this out to some guys that I was dealing with, and we went up to here and got that rejection on the 618, and then that's when we came back and we pierced above it, and now we're at the external liquidity range 706 level. The 706 is an institutional fib level. If you haven't added it to your charts, it might be a nice idea to go into settings and go to 706 and add that there. So that's where we're at currently. We got rejected there just now, and now we bounced off the 65, the 66, and we're kind of in between these regions on the 12-hour time frame here. If we can maintain this pocket and see ourselves to the upside, we can go into these bullish trend-based fib levels up here at the 28.45 region. This coincides with the liquidity pools we were talking about just before, so at least going to this 28.458 region is not absurd to think. And yeah, now I can kind of throw on some indicators of my own and just see what we see in the charts. This is just what we do. You can say indicators and things, everything should be looked at in like kind of like a vision, different visions, like a predator. You put on like infrared, and then you put on this other spectrum, and you should be putting on these different spectrums of vision. And so now after I did the liquidity and now I have my fib set, now I can kind of go into momentum. And this is an indicator developed by yours truly called Momentum Master. You can go to momentummaster.info for more info on that, and go on down to this interactive schematic and toggle all the features there to see what each of the components is in more detail. I'm not going to go over all of that stuff today, but you can toggle everything. This schematic was carefully crafted at Bitcoin's bottom before we knew it was the bottom, because the structure looked beautiful as a bottom, so it happened to just be the bottom. And yeah, you have the rocket ship that appeared. What is the rocket ship? Well, you go to the stochastic array, a never before seen formula which simultaneously monitors more than 7 time frames of information, considering over 32 different indicator values, so on and so forth. So you can just look at each component, what is the trend cloud, and all that fun stuff. Have a look at your leisure. So we're going to go into, what's it called? Higher time frame first. So you generally want to go to the higher time frame and kind of break things down from there. So you can kind of get the higher time frame analysis down pat, and how that transcends downward into the ripples of the lower time frames. So we can even go higher. Let's go to the 2-week. We're going to turn off some of them because we don't need all of them on at the very given moment in time. So the 2-week, on Momentum Master B, we had this Williams that had a rising sun, which just means that it crossed at a pivotal value back here in January. It crossed at a pivotal value of itself on its average at an oversold status. The last time we saw this was back in March of 2019. So does that mean we're going to see something similar in terms of growth? No idea, but it's interesting to note. And we are getting kind of overbought on the 2-week here. This is the stochastic RSI. I'm sure a lot of you are familiar with that. So the stochastic RSI did get overbought here as well, and it chilled out for a little bit and reset in a bullish manner. What does it mean to reset in a bullish manner? Well, it means that you have sideways, somewhat sideways price action, but you reset the stochastic, so you don't give back much while you reset this probability on the stochastic RSI. And yeah, that's what you would expect to do if you double top here and then eventually start to retrace. So we could be due for a retrace based off the stochastic alone, although the Williams here is giving us the green light to go higher and push this up more. So this is what gives you legs on the stochastic RSI, which is why I embedded this into the formula. So this is the Williams %R with a nice formulaic smoothing and back testable levels that we put into our sauce. So this is the Williams %R. You can find it on your own if you need to. And this gray line is the money flow and the white line is the RSI. So we also had bullish divergence on the 2-week, which played out on that liquidity grab we went over at the beginning, and we started to see upside from there. So the bullish divergence, the oversold status of the Williams was the key element here. So we're still bullish on the 2-week time frame. We go to the weekly time frame. Weekly time frame is starting to see a potential double top scenario for the weekly in terms of getting that push up before it got curved a little bit. What do we mean by that? Well, the stochastic RSI is getting curved here. The KD line is starting to curve up, and you could see this kind of double top here on the weekly close in about 22 hours from now. So you could see one of these double top scenarios similar to here or here or here. You know, the second push up basically on the weekly. And you also have, you could also have that double top coming on the Williams. The average of that does tell you can come up a little bit more if you're going to see that upward momentum. So we're still okay on the weekly time frame, and the daily is also getting a little bit high. So let's take a look at the daily time frame. The daily time frame also has the same thing with the Williams. The average of the Williams could still come up a little bit more, similar to what we saw here. If we're having a run to the upside, the average was the thing that kept the thing from resetting completely. And then when the average got to a certain level with the Williams itself, you had this alarm crossover event, similar, the opposite to the rising sun, and boom, we retraced out of that for 11% out of that to reset. So if you're seeing a higher run to the upside, that could still happen until you get a similar situation as to this. But there are no guarantees in trading. There are no guarantees in life. So you could have something like this where it just decides to dump out of nowhere too. But I like what I'm seeing on the liquidity, so this tells me this could be in store. Also, if you look at Momentum Master B, you have the money flow beneath the RSI. What is the money flow? Well, the money flow index is better known as the MFI, is the volume weighted RSI. When I've noticed when the money flows beneath the RSI, it starts to gravitate back up to the RSI. And conversely, if you get the money flow above the RSI, it starts to come back to the RSI. So both situations occur. You got the money flow beneath the RSI, boom, it came back up. You got the money flow above the RSI, boom, bearish divergence, boom, you came back down. So are we getting that same case where the money flows beneath the RSI and we're going to come back up here? This is why we have all these things together on one indicator, and then you can expand it so it's clearer to see. It's hard when it's come back down. This is why it takes up half my screen, and then I can get out of it. So once again, it's like vision. You toggle on and off. You don't need it bombarding you at every moment in time. So this is the money flow and the RSI, and we also have a MACD, which is a leading MACD formula, which traverses from 100 to negative 100. It goes between the domains, if you will. So it's right in the zero domain. It can still go higher on the daily time frame. So the daily momentum's looking still crispy, although overbought on the stochastic RSI. Not exactly in your favor, but the RSI and the money flow are good to go still. Now we drop a little bit deeper into the lower time frames. This is my own special sauce formula time frame, the 22 hour. Why do I like the 22 hour? Well, the 22 hour is a broken time frame. What do I mean by broken? Well, you have a candle that takes place for 22 hours and then 2 hours, then 22 hours and then 2 hours, and 22 hours and 2 hours. So it's kind of a broken beat, if you will. I play drums, and it's kind of like a unsyncopated rhythm where it's kind of like 11/7 or something like that. It's just a broken rhythm. So that broken rhythm has probabilities that reset stochastics in a nice manner, where when you get reset on the 22, you might still be overbought on the daily. So let's show you that right here, right now. So here you were oversold on the Williams and the stochastic RSI on the 22. What was it looking like on the daily? Let's go check it out. The daily was also in the same position, but there were times where the daily was high, and it's done that before and given us that green light on the 22. I think it was here. Let's go to the daily and see. Now you were oversold there too. I think here's one. Let's do the converse. So here you had the daily time frame at this level at 47. So the daily time frame stochastic was coming up, it came down. You did have bullish divergence here on the daily time frame for BTC. And if we go here to the 22 hour, you're most likely going to see it reset in a nice manner. So this 22 will have given you a better reset of the probability, so you could have seen more upside on those plays. It's just an interesting time frame that I back tested that is kind of an unknown thing. Check it out if you have a chance. And yeah, so that was the 22. And wait, did we go down to the 12 yet? Yeah, we did. So the 12-hour time frame getting overbought here. The money flow and the RSI are in a equal position. The MACD is getting in overbought status. The 12-hour wants to kind of come down probability-wise. The Williams is overbought, as is the average of it starting to get to that spicy level as well. Momentum master, momentum speaking. So the 6 hour has the MACD crossing down. You're starting to see the reset of the 6 hour probability waves on the stochastic RSI. The money flow is starting to come back in, though. This could kind of curve it here. We're going to go to the 4 hour and take a look in a minute. But yeah, you could get this like alarming thing for a potential 6 hour dump, but off the liquidity, I'm seeing that not necessarily be the case, but we'll keep an open eye for that. And let's go to the 4 hour. So the 4 hour is getting a alarming cross of the potentiality of the Williams suppressing this 4 hour down more. So you could see the 4 hour reset here. We have reset in a bullish manner. We just talked about what that meant. So once again, the bullish manner reset is seeing horizontal price action while the stochastic RSI goes down and resets. So if you see this occur, it shows that potentially the price will continue higher. Okay, so you still need to always be alarmed when the Williams is overbought like this, though. You could see triple top, you know, on a run up suppression before it does drop, but one of these is going to bring you down. It's just a matter of which one. So that's why you do your own due diligence, and I say that the 28.4 region is about where we start to make our descent back down to retrace land, or at least consolidate and entice both sides back in again. So that's the 4 hour. So one cool thing we have on here is the multiple time frame stochastic. So we have a higher time frame and a lower time frame stochastic, so you can have them all appear on the same charts at once and see how they interact. So here on the 4 hour, you have the 4 hour in purple and blue, and then the hourly time frame in orange and yellow. I'm going to turn off something because it's a little bit messy here. Hold on one second. Let me just turn off the MACD, and yeah. So you have the higher time frame, which is the daily time frame up here, and the daily time frame is trying to curve up, giving you a little bit more love to the upside here, which could stave off the 4 hour dump, and the hourly time frame also coming down slightly but curving in a nature which might stave this off as well. So you're getting that daily time frame support. So we're going to go to the hourly time frame with this on and see how the interactions occur as well. So the hourly time frame is here in blue and purple, coming up with the 30-minute time frame, the lower time frame here, stochastic, starting to get pushed up by the hourly as well, and the 4 hour, which is starting to come down, could get that guiding light from the 30-minute and the 1 hour here. So you could see that push up from the hourly time frame onto the 4 hour to stave off downside, which it seems to be doing from the early morning dump from Asia this morning. And if we go to the 30-minute time frame, we can see they're all working in tandem. You had the 30 with the 15-minute pushing up here and curving the hourly in a nice way. So you still have the 30 and the 15-minute wanting to continue forward with the hourly time frame. And this is how you watch how the momentum interact with each other. Of course, you can go between time frames and put the pictures together in your head, but the whole point of this is to put them all in the center of your coffee table and put the puzzle together in one location, in one frame. So that's why we have that together for you. So yeah, the 30-minute is coming up right now. It's reaching the end of its rope, but you do get legs towards the end sometimes. And the 15-minute also overbought, probably getting that push from the 5. We're going to turn on the other indicators here. This is the ultimate. So this is an interesting thing that gives you these symbols when you're overbought and oversold on multiple time frames. So when you were overbought on 6 time frames, it gave you that cool down signal, and when you're oversold on 3 here a moment ago, it gave you that, and it would give you that alert to your phone, so you don't need to monitor it all the time. So where are we going from here? If we maintain this 236 level at 27,126 based off of this impulse retrace to the upside idea from this initial drop and then retrace, if we can maintain this 236 level, then we can start trudging our way in this little mini scalp idea that we were putting out earlier today. But ultimately, getting to that region up here is the idea, 28,448 for that. And that guy we were talking about earlier up here, a clear imbalance in the immediate local range at 27,704, looking juicy to scoop up. 27,748. 27,748 would put you about here. That guy is there. Alright, so Once again, you're overbought on the 15-minute though, so the best you can expect is if you're a pattern trader, you got the shoulder, the head, and then you expect some sort of consolidation, right shoulder up out of here. Or if you're more risky trader, you could just, you know, play the hourly 4-hour play. And what is the hourly 4-hour play? Well, the hourly was previously oversold, so you're starting to see the hourly come up. So are you going to get that hourly push out of here is the question. All right, so I'm happy to take any questions from the audience here. Let's go see what everyone's doing it. Booyah. Doesn't look like anyone's in here today. It's all good. We're gonna record this and give it to you all later. So yeah, last point is I guess we can go over kind of internal versus external liquidity ranges. So we'll go to a fresh chart to do that and turn off the indicators, and then we'll bid you adieu after that point, shall we? Okay. All right, so let's get to all right, so let's say from let's just say from like there was a time when we were doing from where was it? So there's different ranges, right? So you have, of course, this range from the bottom to the top. When you were back here, this was your range, your liquidity range for this pool to the upside from January, and you take it from the impulse to the top, and then that's your kind of range. And then this would be an external liquidity range that we tapped into down here at the 618 exactly. And so when you're trading sideways, as you were between this region here from January 21st to February 9th, that's quite a long time to go sideways. This entire range would be a internal liquidity range here. And so you would, if you were trading in this liquidity range and you were scalping between points, then when you start to tap outside of the range, then you're going into the external range. So you have these external ranges out here. This would be external, and these would be external too. When you're trading in this range during that time, do you know what that range is? Well, you can kind of get it as you go. When they start making lows and highs, you just make sure you have your fib levels between the lows and the highs as they develop. So at this time you would have been trading between these ranges, and you always look for buys below the 0.5 and you look for sells above the 0.5. So this is what you would call premium versus discount. So above 0.5 is premium, and below 0.5 is your discount range within that local scalp range. Now when you are dealing in that, you realize that you've been to the upside, so this is the end of the line for the external range, and it's not actually discount for a long-term hold. So you'd be looking for setting up for that premium selling short position back into that juicy pocket, but you don't know when that's going to occur. So you always take it as you come out of that range here, and you start to find you always lock in your gains as you bounce off these fib levels on the external range. And so you could have also easily established a short up here, because this is definitely premium and this is definitely discount as you exit out of those ranges locally. And so you could have entered into a super short up here based off of it being a premium idea, and then the discount as you reached into the 618 region of the external range, that's also a discount. And so you're also getting up above and you're entering into a premium range for external liquidity. So this is going to be something even further, and so you could delete this because it's gone now. It served its purpose for that 618 bounce on the discount range here, and you go to the external range over to the left, which we are showing the 618 rejection at before. And so the equilibrium slash discount idea of discount below this price, now anything below 24 in this external range is discount, and then anything above this 618 is kind of premium. So we're entering that premium juice level. So if you have this open, we could look at the 28761 region as that kind of premium rejection idea. So the more shorts that keep opening, the more they pave the path to be wrong though. So you always got to keep in mind, where does that premium idea finally come to fruition, especially with such a vast move to the clear direction to the impulse to the upside. So if we get rejected at the 706, then this is generally where you start to come back down into. But as the liquidity suggested here, you still have some more up in this region. Now, they did previously go to that region and then leave it there. So they left this here in February and came back down. They left 162 billion in the charts. So there's no guarantees that they will come up to this either. So don't get fooled by that idea. But just the idea of internal versus external, wherever you're trading at within a range is your internal. When you start looking outside of that range, that's the external liquidity. And if it's outside your range here, like if you had this here in the initial breakdown area, and then you started to break down here, this would be an external range. So this entire thing was a discount zone. So while people were getting ultra bearish, you should have been thinking possibly for that discount price. And so it's external versus internal liquidity and your discount versus premium idea, and not getting fooled into the idea of going long as you see these breadsticks to the upside, thinking about it as a potential premium short sell idea. And that is internal versus external liquidity and premium versus discount. All for one and one for all. Hopefully that made sense. And as you see, the 618s change, but the principle remains the same. You got that nice rejection at the 618 here, and it would have given you like a 9% rejection gain from that idea. So if you had ridden that 618 to that 618, you could have had a nice little juicy play. So if you look at this, I just have the pocket there and the pocket there. So from 618 to 618, boom boom. So you could have had like this, like a 34% gain on Bitcoin, just playing your external liquidity range game. And that, my friends, is how you do it. Alrighty then. Well, we're short but sweet, but we value your time, so we provide you with the sauce and the special juice. Before we bid you adieu, I'll say one last time, what were the indicators we were looking at? That was momentummaster.info. Please check it out. And yeah, I hope you found some value and it was worth your time. Once again, thank you for coming on in and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thanks for doing your part, for coming on in, and I will catch you on the flip side, ladies and gentlemen. I'll catch you on the flip. Peace.